Hi everyone, this is Mark with Right Line Trading, and I'd like to welcome you to the Right Line Trading Options Alert video newsletter. This is our first video newsletter, and we're providing this currently as a free service. This is not a tutorial on how to trade different options configurations like call spreads or bull spreads. What we're doing here is we're actually showing trades that cross the ticker in the last few days. We're trying to provide you some insight into where the big money is moving in terms of the options market. Now, if the big money is moving into options at specific, looking at specific strike prices on the underlying stock, there's a good bet that they feel that the underlying is going to hit that strike price before the options expiration date. So it's not only a good guide for buying options, it's also an excellent guide for buying the underlying stock. So why don't we move forward and take a look at our first. Now, first we have to go through a quick disclaimer that all signals and trading opportunities provided both orally, written, and electronically that are disclosed to visitors or subscribers are for educational and demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within the futures, forex, or options markets, nor any profits or losses that may be incurred. And participating in trading in the forex, futures, and options market does involve substantial risk, and it should be understood that a person can lose substantial amounts of money. Therefore, participation in these markets is not appropriate for everyone. Remember, we are not licensed commodity trading advisors. With that said, let's take a look at our first options trade. Now, I'm going to skip ahead right here and show you that on January 5th at 6:36 a.m., a very, very large trade crossed the Bloomberg markets regarding the iShares Russell 2000 Index ETF. And let's move back and take a look at the chart. Now, this is the IWM, and we can see a topping pattern that maybe the Russell 2000 Index has just about reached its high. And what's going to happen here, it's either going to consolidate and break to the upside or consolidate and break down. Now, according to Dan Deming of KKM Financial, who spoke on the Bloomberg markets, he felt that IWM was topping and was going to break down, and he recommended a bearish option strategy. Now, he thinks that the IWM could drop to 130 if it breaks 135 support, and he recommended to buy the March 135-131 put spread to profit from this potential decline. The spread would cost 95 cents, and we recommend that if you're going to create the 135-131 put spread, you put it in at a 95-cent limit. That would set the break even for the trade at 134.05 or 2.71% lower below the current market price. Now, if the iShares 2000 Index ETF drops to 131 or almost 5%, the trade is going to reach its maximum profit of $3.05. So for a risk of 95 cents, you're looking at a potential profit of $3.05. So this is for a bearish put spread, the March 135-131 put spread, to create almost a 3-to-1 or a 3-to-1 risk to reward. Excellent here. And personally, looking at the iShares Russell, I believe that it's a bit overextended. I think that we could see the Russell 2000 Index retreat, and one of the reasons I put this recommendation in by Dan Deming is because I believe he's correct. and I believe that we're going to see the Russell 2000 index more likely break down than consolidate and break to the upside. Trade number 2 is Mike Kuho. Now he's looking at the Healthcare Spider ETF. Ticker is XLV. Now he believes it's better to trade individual stocks in the healthcare sector than trade the ETF itself. And he's recommending a February 120-130 call spread in Celgene for $2.55. The trade breaks even at 100 if the stock hits $122.55 or 5.87% higher from the closing price on Friday. If Celgene jumps to 130 or higher, the trade is going to reach its maximum profit of $7.45. Now let's take a look at Celgene. And here's a chart of Celgene. Now, biotechs have not done particularly well over the course of the last few months, and he believes that Celgene is going to make a major move, breaking across this top right here. Our next trade is Pete Najarian, who spoke about call options buying in JetBlue Airways. JetBlue has seen a significant number of call positions cross the ticker. He personally owns call positions in the name, and he wants to hold them for at least a month. He is bullish on JetBlue because of this huge volume, and he's looking at the February 23 calls. Here's a chart of JetBlue. You can see it's retreated, I believe, since he made that call. But I believe that JetBlue is going to move higher. Now, there was some bearish news that came out recently about the volume on United Airlines. But I don't know if that's going to be applicable across all of the different airlines airlines companies, and I would follow his trade and establish the bullish position on JetBlue. Specifically, again, looking at the February 23 calls. Now we're going to look at some of my favorite trades. The first one is Baidu. You can see the 1,635 contracts crossed on January 5th at 11:25 a.m. And so February 10th, 177.5 call sweep. Lots and lots of contracts, 1,635. This particular trader paid $4.893 per contract. It's important to see that open interest at the time was only 35 positions, which means that this is the establishment of an entirely new position. So Baidu, February 10th, 177.5 strike. My next real favorite position I really like is Palo Alto Networks. Now, Palo Alto Networks was recently crushed. Earnings really fell short. The stock took a 10% pounding, but internet security is really important, and you can see with all of this hubbub about the Russians breaking into the DNC and Hillary Clinton's emails and John Podesta's emails, the internet security area is really an up and coming and growing area. Now, investment in the area is cyclical. You see companies pouring money into the sector, at specific times, and as their software wears out and they require an upgrade, a large amount of money flows back into the internet security area. But Palo Alto Networks, which is really, I think, the blue chip company in this area, is really down. So I think you're getting this company at a premium. So I really like the January 130 strike. And these are the monthly Januaries. Now 507 crossed at an ask of $4. Now open interest is it's 2203. Earnings are 223. So you're establishing your position before earnings. But I believe the options on Palo Alto Networks have a high probability of success. And I personally am pounding the table on Walt Disney. Ticker DIS. Over 10,000 contracts of the June 115 calls were bought in the first half of the session last Wednesday. Now, since that time, Walt Disney has gone higher. It's still trading substantially below June 115. I think with the current movie out, whose name I can't remember at the current time, although I haven't seen it but would like to. It's already closing in on $600 million of profit. Worldwide, it may hit $1 billion. They've got just an entire huge array of movies coming out. I don't think the 115 price is really extraordinary going out into June. So I am pounding the table myself on these three. The Baidu February 10th, 177.5 calls. Palo Alto Networks, the January $130 calls. And these are all monthlies. And except the Baidu, I think the February 10th is the monthly strike. And Walt Disney monthly strike, the June 115 calls. So those are my options picks for tonight. It's fairly late in the evening on Sunday, on January, what's today's date? January 8th. But we'll be coming out with another newsletter, 2 more newsletters this week, not only to bring you up to date on these trades, but to give you a whole new set of trades that options experts are recommending, and options trades that I see are moving across the ticker with enormously high volume. Now, we're at Right Line Trading, 1-855-765-6681. Our email, our address is www.rightlinetrading.com. Our email is info@rightlinetrading.com. And we have an options alert newsletter. If you're interested in taking a look at that, that's where I take a select number of trades and recommend them to all of our subscribers. This newsletter is free, and I appreciate your participation. Everybody have a really wonderful evening. Take care.